We're joined by Bill Hunt, president of Amansani. You've been in Beijing, you've been based in China since 2001.
Yes.
Your background is very much in real estate, so you were with Century 21. At the moment, there's a lot of talk about a property bubble in China. What are your thoughts on that?
Well, I definitely agree, Stuart, that there is a bubble. And when you look at the fact that, for example, in Beijing last year, property values increased 88%, and in Shanghai it was even greater than that. So the prices today are at all-time highs. There's this huge gap between the high end and what the rest of the country can afford. And that kind of a rapid increase in prices, it just can't continue. And so the government is focusing very hard on trying to stop that huge growth.
They've been trying for many years to cool down the market and trying to rein in the speculators, but with limited success.
Having been in China now since '01, I've actually seen this happen before. In 2006, the government had the same situation, and so they put a lot of government measures in where they controlled the interest rates, where they demanded higher down payments. If you had a second home, you might not be able to buy the real estate. They put taxes on the sale of the property. If you sold it within 5 years, you had a severe tax. And that had a good impact. For the next year, the property values did drop a bit, but the pace slowed down considerably. And then they let it go after the fear that the world crisis was also going to impact in China. So they opened it up. But then they did another thing. They also opened up the faucets for the lending, and literally trillions of renminbi went back into the market. But I think even a greater cause of what's creating this bubble is the fact that all of the local governments, they make a huge amount of their revenue from the sale of the land. So the higher the price that they can sell the land to the developers, not only do they make money on that, but they make money on the taxes from that. And so that's coming under an extreme amount of criticism right now, that they need to find another way to have their revenue instead of just selling the land to the developers.
Well, you'd expect there to be a certain amount of growth and speculation given the rapid economic growth in China, but it seems to be a bit out of kilter in terms of the sort of figures you were talking about earlier.
Well, and that was fueled also by, as you mentioned, the speculation. And at one point in Shanghai, as an example, 65% of all the residential sales were investors that were living outside of Shanghai that were investing with the idea of flipping the property, reselling it. And of course, that demand has stopped. When the government really started putting the pressure, for example, in December, in the month of January, the property numbers of sales dropped 50%. So it had an immediate impact, but that's still, there's still a large problem. In the month of February, the government reported that property prices had gone up in 72 different cities by 10.6%. So there's still this bubble that the government's trying to control.
How do you think it can control it?
Well, you know, if I knew that,
can they control it?
You know, they can. I was looking at some online numbers today, and in many of the capital cities in the provinces, they are seeing a slowdown. For example, Wanke, which is the largest development company in volume, reported I think it was a 35% drop in sales in the last month. So there is a slowdown that is starting to occur. But it grew so rapidly, it's not going to stop overnight. But the momentum maybe looks like it's starting to turn downwards.
You're working as a consultant at the moment on a couple of developments in Beijing. One of them is like Times Square.
Yes, the developer has 600,000 meters of property at the far west edge of Beijing. The government in their 5-year plan listed culture as one of the pillars of their plan. And so the developer was looking to do something that hasn't been done anywhere else in the world, to create over a very short period of time Times Square with 32 Broadway theaters and an entire cultural district that would include several thousand residential units. It would have several hotels and, of course, a whole commercial retail segment that would go with that. So it was it's a very ambitious project, and she's been working on it now for close to 7 years, and most recently has had some good news from even the central government that they're looking to embrace this kind of a project.
Well, as you say, it's an ambitious scheme, and there
Very
are many ambitious schemes within China. Do you think at some stage the bubble will burst?
Well,
or deflate at least?
yeah, I don't foresee that China would have the kind of a deflation, for example, that happened in the United States, where so many of the markets, property prices have dropped 50, 60%, where there's literally millions of foreclosed properties that are back out on the market. I don't think that will happen just because of the sheer size of the marketplace that China has. So it won't burst, it's not going to be a bomb, but it will slow down. It just can't keep going at the speed that it's doing. But also the government has to be very aware that because of this discrepancy of all the higher end properties and the fact that there's so many people that can't afford, so they need to close that gap, and they need to provide more housing for, affordable housing for the citizens, maybe some sort of subsidies programs, even similar to what they do here in Singapore. So those kind of changes will happen.
You're going to be talking to MBA students here at INSEAD. What's your advice going to be if they're looking at China for a potential career?
Well, there's a huge market for the students. China, I think there's a couple things that have been happening. You read in the news that so many of the graduates from university in China are going to have a hard time finding employment. There's literally hundreds of thousands of students that may have challenges because there's been a slowdown. But the real fact is that it is such a dynamic economy. There's so many multinational companies that are not only in business today, but still coming into China, and they need good people. They need professionally trained people. And it's not only the returning Chinese that have been overseas that are coming home, and the government's really embracing that, but there is still a huge demand for young executives that want to come in and work not only with the multinationals, but there's so many of the Chinese companies that are growing so rapidly that are looking for help.
From your own career perspective, it's quite interesting. You were in the States for about 20 years with Century 21, then you shifted to overseas. You were in Asia you've been in Asia for 20-something years?
Yes.
And then in China for the past 10 years. You've left Century 21 but decided to make it your home.
Well, China, it's really, in my opinion, kind of the epicenter right now of the world's economy. It's the fastest growing economy. It will surpass probably Japan's, they say, within the next maybe sometime even in 2010 as the second most aggressive and rapid growing economy. So it's really an exciting place to be right now. And I've always been very entrepreneurial, so I don't see myself leaving China in the near future.
Bill Hunt, President of Amansani, thanks for joining us on INSEAD Knowledge.
Thank you, Stuart.